Okay, good afternoon, guys. Welcome to the trading clinic. My name is Steve Ruffley. Today we're going to focus on the Bank of England once again. Always interesting when you've got the Bank of England and the ECB. Seems that all the things I've said over the last 6 to 8 months have really been absorbed into the market now. So the reason why cable seems to be falling off is that again, everyone retail now is understanding that the UK is certainly going to move on interest rates at some point in the near future. So that really, again, has brought people into the pound. But realistically, all the institutional traders, all the professional traders are getting out because they've been buying the pound against the dollar for many months, many years. So again, it's a logical time. It's understanding how markets work. And once you've spotted a trend, you're already too late. And I would say that it was fairly obvious from my research and my perspective that interest rates would have to be normalized at some point. And when you look at the US, Eurozone, and UK, the UK just looks in a stronger position than both the US and especially the Eurozone. So I think a lot of people are going to be keeping one eye on the Eurozone and what's going to happen from Draghi and the ECB today. It's not to say that things won't happen in the in the UK markets or anything to do with what's going to be said today. What I always like when we're trading, especially fundamental data, is that the market is expecting nothing out of the ordinary. So that means even if there's a little glimmer of something or something is not quite as it seems, then you can get bigger moves because it's all about catching the market off guard and understanding that traders will use any opportunity, any bit of information in order to move and make the markets move aggressively for a very short period. Because volatility is how the short-term professional trader makes money. So today's going to be not a non-event because I never think they are. Again, some of the biggest and best trades we've had have been when the market has not been expecting anything particularly out of the ordinary. And again, like I said, it doesn't have to be the interest rates go up today. Again, that's a very unlikely scenario, but it could be a hint, it could be some comments, it could be something, reading between the lines in the forward guidance or what is released. There's always some movement after the event. So before I start, as always, let me just read the risk warning. Remember that spread betting and CFD trading carry a higher risk or capital confronting losses that exceed your initial deposit. It may be suitable for everyone, so please ensure you fully understand the risks involved. Now, the information and comments provided here under no circumstances are considered an offer solicitation to invest. Nothing can be issued investment advice. The information provided is believed to be accurate. The data is produced. Education only. Content of webinars posted with moderation on trade.com. Content not constitute financial investment or tax advice. Trade.com is not accept any liability for the content of comments made during this segment. So we're going to go over some live charting analysis. Again, what we're trying to do is balance out the 80-20 rule. So 80% of the time, the market is going to move technically between support, resistance, points of interest. 20% of the time, they move from fundamental data. Today is that point, fundamental data. Regardless of what comes out in the decision is, the markets will move based upon people's perceptions of value, people's perceptions of what could happen in the future. So multiple time frame trading is just a way of looking at different time frames to understand what we're trying to do. I mean, again, we're going to look at the hourlies, maybe 15 minutes, depending on what the market is trying to achieve and do. And what we're trying to do, again, is understand what can happen in the short term based upon what can happen in the longer terms. So we're going to have live real money trades, if I see anything interesting, and obviously Q&A that works from you. So before we start, we'll just have a quick look at the markets and just understand that, again, we're having a very, very bearish and negative cycle still in the pound against the dollar. So we see the markets, again, are exhibiting this hourly Fibonacci. And again, time and time again, when we use these fibs, we see the 50% coming up a key level, a key point of attraction when the markets move down. So we see the 50%, really the market spikes up higher, back on the first, and then really we don't look back from there. And the market then again finds all these points of attractions on the way down, a nice daily level of support, 165, 371, and the market again continues down. So realistically, the next point of serious attraction is this monthly level down here at 1.63780. Okay, but I mean, again, if you look at the monthly chart, we can see how that's really kind of come about. So I said the 50% of this move back in 2006 is really what we're still focusing on now. The market's moved off very, very aggressively and sold down. And then we're looking to kind of peak out and see if we're going to find support or resistance by the 1.736 mark. Again, we didn't find support at all. We didn't test it. The market then has obviously moved back down to the higher time frame moving average. So that'll be the next point, decision point. If we bounce off that, we could get to 50%. If we don't, then we're looking to break this big level down here where the market's found consolidation. Then at 1.52, and we break below that, then you expect these lows down at 1.35 to become a point of attraction, the market then to continue this down move that we've seen. So it's all about understanding the higher time frame moves based upon what's happened in the past. They could do this with any market. I mean, that's the whole point, isn't it, about trading and about any kind of product that moves. What happened in the past will happen in the future. Just understanding where we are. As I said, trading is about being. It's not about being right. It's about being right at the right time. But when we understand where the market's a bit, we understand where we can go. But if you're looking back, to 6 years or 7 or 8 years ago of where the markets was high and low, it's going to take time to come back. Markets don't move as quick sometimes as we'd like to. They don't just hit a low point, hit a high point, and then just do exactly what we think. Has anybody got any thoughts themselves on the on cable? Do we think it's going to go higher or lower from this point? I mean, again, if you look on the weeklies, it looks a little bit more bearish than it does the monthlies. Again, look, we've seen 1, 2, 3, 4, 5, 6, 7 indecision. Really kind of 9 weeks of continual selling. Do you think we've hit a low point here, or do you think the market's going to bounce? Any thoughts, guys? Any thoughts at all? Is anybody trading cable? Is anybody trading anything else based upon cable? No? Correction is pending. Expect to be the first to raise rates. Maybe supportive. Okay, down. Okay, so everyone's thinking down. I mean, the whole point was when I was talking about what cable's going to do, I was talking here. I said it's only going to go higher because interest rates are going to have to move first in the UK. There's a few reasons why they're going to move in the UK. The first one is to control house prices. Okay, average house prices, average earnings don't match. Okay, so there's going to be at some point where the system, the housing market just, I don't want to use the word collapse. It corrects. People are using property as investment tools, so they'll act like investment tools. Okay, that's the whole point. If you start to, trade a physical thing, a physical, thing where people are meant to use to live, as an investment tool, then it's going to be treated like an investment tool. So these things don't necessarily work out how we think. Everybody's happy that, the house prices are going up because the majority of people in the UK own their own houses. But, just because you own your own house and that's going up more than your wages are, doesn't mean it's a good thing. You need to be supporting, what the society is doing and trying to achieve by reasonable wages. Your house is only worth what it's worth when someone's willing to pay for it. And also, you've got to live somewhere. And we've all seen how people cashed in the properties early and went to Spain and how that's all working out. Not very well. So just because your house has gone up, 5 times in value doesn't mean you can actually realise that money. Maybe you won't realise that money until you die. And then what's going to happen? It's going to pass into younger generations. And are they going to keep the houses? No, they're going to sell them. So all these things are part of a bigger cycle. So the pound and controlling interest rates is quite an important thing. Normalising interest rates in an ageing population makes sense. The more, people are retiring later, but that's generations on. We've been told that we have to work longer to support the aging population. People that are retiring now are retiring earlier than they ever have because they got property, money. The pensions might have been, particularly great, but they've got money from elsewhere. They've bought other properties. So people are retiring now earlier, and that means that people have to work later in future generations to support that. I mean, we're already past the point in China where the up and coming population can support the aging population. In the next 1 year or 2 years, I think that's going to happen in France when that's overtaken. And the rest of Europe is just the same. So we're going to get to the point where we're not putting enough money in the economy by the people coming up because the wages just aren't there to support the older generation. So something's going to give. All these things can't be supported forever. So in the short term, I think we are definitely looking down. I mean, it looks a very, very negative chart, does cable. So when we've had this indecision point to perhaps bounce and go higher, I think these lower levels are going to be hit. So really 162 602 is definitely a big attraction point. So moving through to the indices, still fairly strong in the FTSE. You can never say 100% positive, but I'm 70% positive we're still going to hit 7,000 in the FTSE. S&P has hit 2,000. Dow's made record highs. I just see that with a longer term picture, although people are worried about Ukraine, Russia, etc., we're still fairly positive. So I'd say 7,000 is still very, very achievable in the FTSE. And again, these daily charts are seeming to show any excuse from news from the markets is to bid it up. I mean, as I said, the dip buying of the dailies was where we were making our money back in the charts, but it's come back with a vengeance. Look back, to here. Every time we don't close towards the low on these daily candles, the market goes back up. This has happened 1, 2, 3, 4, 5, 6, 7, 8. So 8 of the last 20 trading days. Every time we haven't closed towards a low daily candle, the market is opened and gone higher. So I don't see that stopping. Okay, we're towards the highs here, but once these all-time, well, not all-time highs, but once these recent highs on the dailies kind of break through, the momentum's going to come and push the FTSE through 7,000. Nothing's more inevitable. I said it was going to happen in the S&P, and it did. And I still maintain that the DAX has hit 10,000, the S&P's hit 2,000, Dow's made record highs, Nasdaq at highs. The FTSE has to. It might make 7,001 pip and then come down. But I would say that we've come too high, too far in the charts now to not test what's above here. Because traders are, are intrinsically greedy, curious. Who knows what stocks are up here? So they're going to stop, hunt, see what is above 7,000. If nothing grabs their attention, the markets will come back down. But I would say that it's an absolute, again, I can't say inevitability. I would say it's a very strong possibility that we hit 7,000 in the FTSE. So what else have we got? I think Manjo, that's not a bad shout. I think the Scottish referendum will have some impact. I think a lot of people have seen over the last kind of weeks how the intensity has increased. And I think when I wrote about this, kind of 2-3 months back, I was always of the mind that Scottish people would vote with their heads, not their hearts. It's a very passionate campaign. It's very individual to Scotland. And you would think that the yes vote really, I think you just think that the common sense will prevail. The world's not really a very safe place right now, both economically and, kind of in wider terms. We just don't know how Russia and the Ukraine is going to spiral. We don't know what's going to happen with, Iraq still. We're still unsure about Iran and China and all the kind of these big things. It seems to be it's better to be together. So it's better to be, in a union with the UK rather than be out on your own. Look what happened to Dubai. Dubai realized that oil wouldn't be around forever, so went into the tourist industry, in a big, big way. Built a whole city in the desert. That's not really worked out well for them, but at least they've got a plan B. So what, is Scotland going to make, all its money from oil? Is oil really going to save Scotland? I think it's all very short-sighted, and I think the arguments for a Scottish independent are very appealing to the average man. But I think the arguments for staying part of a greater union and being part of a bigger picture really should outweigh any argument. I just don't see how Scotland can see that, individually people might be £500 a year better off, but then you're on your own. So if you ever want to go back to being part of the UK, that might be a non-possibility. I think no matter if it's yes or no, there's going to be a lot of friction now between Scotland and UK for the foreseeable future. And I don't see that being a good thing for either side. I would say that there has been weakness, obviously, coming to the pound, because although Scotland's not a huge economy, it still makes up the pound. So any kind of disruption to that is not going to be a good thing. So I think that the argument for Scotland isn't the strongest I've ever seen. But I think that especially Darling's argument for Scotland staying with the UK was so weak, that really has fueled the market speculation that a yes vote could be a lot stronger and a lot closer than people think. But irrespective of the outcome, yes or no, it hasn't been a good thing for England and Scotland relations. And I think that is right, Manjo. I think that will continue to increase weakness in the short term in the pound. Okay. So my younger brother lives in Scotland. He says there's still apprehension to say yes in the minds of the common people. Yeah, I mean, absolutely, absolutely. I think that the way it's being built is a life-changing decision, and I guess in some respects it's not a life-changing; it's a generation-changing decision. I personally want Scotland to do whatever is best for Scotland. Okay, I don't really have a bias either way. I don't live in the UK, so I don't care. Um, it's the way I look at it is that it's one of these big decisions. And if you make it and it goes right for you, then you get all the spoils and it's fine. Right now, I'm risk averse, as many people are. Okay, it's not really the time, is it, to be a maverick, to be out on your own, to be trying something new. Huge projects like the Trident nuclear missile program. If that leaves, that's 7,000 jobs. Where are you going to create 7,000 jobs in a specialised industry like that? Yeah, Scotland haven't really thought about it. I don't think Scotland ever thought they'd get the yes vote, and especially Alex Salmond. So I think that he made a lot of passionate pleas and a lot of tactical moves, and now all of a sudden the yes move is totally plausible. But what he hasn't done is put all the things in place. So we still don't know what currency they're going to use. They still have no real plans for employment. They have no real plans to reform the NHS. No, how do you think you're going to reform the NHS? Scotland is famous for deep fried Mars bars and having an unhealthy lifestyle. We're an aging population, okay? And aging populations mean they're going to need more healthcare. So if you're out on your own, you don't have the economies of scale and the direction from the UK and from the direction of the NHS as a whole. You know, what if you're the only kind of part of the NHS that suddenly you promised everybody free NHS care and better service, and all of a sudden in 5, 10, 15 years time, your demand because of the aging population and ill health has gone up 20-fold. How do you cope with that? You know, once you set your budgets and you're on your own, you're on your own. There is no more money. And the only way you can raise any more money is by higher taxes. And nobody likes that. And certainly nobody in Scotland is going to put up for that. If you voted for independence and it was going to be a better deal for everybody, then all of a sudden, with the lack of jobs, you know, you have to then put more money into taxation to be able to pay for these economies of scale that aren't there anymore. You know, it doesn't seem so good, does it? So I would say it's an interesting one. And one way or another, nothing good will come out of the Scottish referendum for England and Scottish relations, and nothing good will happen, I don't think, for Scotland either way. So I think that it's been a real mistake bringing this referendum at this time, and I think both sides are going to pay, and that's just the way I feel, I'm afraid. So Harsh is just saying, if they get the independence, the biggest challenge will be to create a central bank. They don't have it at the moment. Yeah, I mean, the central bank, you know, it's an established thing in the UK. People might not agree with it or understand it, but, you know, it's stood the test of time. So is the UK economy. Creating your own central bank, creating your own army, creating your own navy, air force, creating everything you need to be an independent country took the UK hundreds and hundreds of years. Scotland seemed to be enjoying the fight and seem to be enjoying having a decision, being in the limelight, being in control of their own destiny. But like many things in life, when you get what you want, it's never what you think. It's like starting your own business. It's great being your own boss, but you don't get the security. You know, you don't get all the benefits that come with, you know, working for somebody else and somebody who's stood the test of time. And there's a lot of uncertainty. Is now the time to be increasing that uncertainty? I really don't believe so. So I think tough times ahead for Scotland and tough times ahead for Scottish UK relations. But yeah, good question that. So again, my arguments for the strength in the FTSE remain. I don't think 7,000 is an unrealistic target. What's above it? You know, I don't know. You do some Fibonacci extensions probably just to see where the market could potentially get to. And I would say that really the rejection of a down move started here. So to the highs previously, you could see the FTSE get as high as 7,026, and then above that, 7,230 before we started to see, you know, got some probably stops to be triggered up here. I would expect that, you know, above 7,026, that's when we're going to decide. If we find support, we're certainly going to test 7,100, 7,200. If we don't, then we're definitely going to get back to the range and maybe as low as 6,500, maybe towards Christmas time. So it's letting the market tell us what it wants to do. You know, again, it can only go up or down, can't it? It just depends, you know, what we think. Trading is not about being right. It's about being right at the right time. You know, we could buy now and, you know, the market could come down before it then goes up. So again, it's about timing. It's not about just, saying that the market's going to go up, so buy and hold on. It's about being right at the right time. Gold's an interesting one. Again, we've seen, gold push up on the back of these Ukrainian fears. But as I've said, gold's going down. It's going to $1,000. So really, we're kind of consolidating round about these lower kind of 127 levels. Once we break 1260, there's nothing in the market until 1251. Below that, 1240. And really, once we break 1226, then we're on a one-way stop to 1,000. Absolutely. Think about this. There's apparently no gold in Fort Knox. Okay. Gordon Brown sold all the gold in the UK at lows, years and years back. What kind of countries have gold? China, India, Iraq. People that not seeming to be the enemy, but emerging markets. So if the US has done some sneaky deal and unloaded a load of gold, and the UK have no gold, it's in no interest for the world superpowers to make gold more expensive. There's no physical shortage of gold. With the cash converters, gold converters, there's more gold than there's ever been in the world. So if there's no fear and there's no greed and there's no institutions, why are all the institutions getting out of commodity trading? Yeah, because gold prices aren't at record highs. So there's 50% less hedge funds involved in gold than there were this time 3 years ago. Think that's a coincidence that gold prices are now selling off? Once we hold below these key technical levels, yeah, which we have done for some time, yeah, the 1300 mark, for instance, yeah, look on the higher time frame. What are we doing? Yeah, do you realistically think gold's going to bounce and get up to 1800 again? It just can't. We're consolidating towards the low end. Yeah, so do your Fibonacci's again. Low to the high. We're at that 50%. There it is. 50%. We're below it now. Yeah, had the opportunity to consolidate, hold above it, get above the moving average, and go up, but we aren't. Yeah, we're below it. So again, look for all these key levels. Once we broke down to these low points at 1251. And that consolidation area, all these levels will be hit. So look how it starts to make great shape on the monthlies. 1280, 1030, bang, that 1,000 technical level comes, gets smashed through, and we're down to back, to $700. Okay, look at it on the weeklies. Again, lower highs, lower highs, lower highs. Market just looks weak. Okay, so look in your dailies. Same scenario, lower highs, lower highs. Find them high points in the market, sell them, gold, again. But what I would say is on the dailies, look for 50% of that daily move here. So as long as we hold below 1.274, spot 82, yeah, as long as we hold below that in the dailies, then gold's going to attack these lows at 1.260, yeah, and then come back down. $1,000 by 2015 was my call on the FT. Not quite sure if we'll get there that quickly yet, but you just don't know. Once it picks up momentum, you can see how big these daily moves in gold can be on the up and the downside. There's no it's not inconceivable to say that gold in the space of a couple of months could just sell off and get to $1,000. So yes, gold's down for me. Gold is all the way down. So obviously, got the Bank of England going to come out in about 7 minutes, guys. So unchanged is the call. I think one eye for everybody else is going to be on the ECB. But I mean, again, what likely scenarios we could see is again that anything from the voting members, any kind of indecision or anything that where there's a lack of congruent thinking and a lack of cooperation. Anything that kind of rocks the cart is what we're looking for. So anything, again, we're expecting unchanged by all these things, and that's absolutely fine. We don't have to necessarily, let it be out of line, be in line, or be unexpected. What we have to just know is that realistically, people are going to be watching this announcement, and the most likely movers on the back of this will be cable, will be the FTSE, and possibly could be a filter through to gold. So anything positive, we're expecting the FTSE again to break back these highs up at 1898 and then get through to that 7,000 level. Anything negative, then again, we've got this big daily level at 1.64403. But for anything negative for the pound, we'll see it push down to these lower levels. Gold, again, we're ranging towards the intraday highs. Okay, so what we've seen in the past is anything high on the monthly and weekly charts of gold have been sold off. So anything high, we're looking to sell gold. Anything low in the FTSE, we're looking to buy to push it up. And anything high, in cable and anything that will affect, that demand for the pound, we're going to see the low points hit. Okay, so majority of analysts are going for unchanged, but doesn't mean the markets won't move. Look for any significant breaks, okay, on the low of cable, any significant low points in the FTSE to buy, and again, gold, anything high, we're going to sell. So we've got 5 minutes to turn there in the Bank of England. Is anything anybody would like to go through outside of the products I've mentioned? Cable, FTSE and gold are what I'll focus on. Is there anything else anybody else wants to look at quickly? Steve, how do you get to know so much info about many hedge funds are involved in gold? Could you share your sources? Well, I just know a lot of people, Manjo. I know a lot of people. I spend a lot of time speaking to industry experts. I have a PR team. I have a massive research team, that kind of provide me with information. I just know a lot, Manjo. Google a lot of these things. A lot of this stuff, is available on Google. If you look at the stats, look at things like company houses, things, news articles, all these things, all this information is out there. It's not anything new. Watch the news. When people like UBS are getting out of the commodity market, then that's a huge chunk of the market that just disappears. Dollar CAD. So dollar CAD, again, playing with these fibs very, very nicely. Objection of the 50%. So this is your break point in the dollar CAD, 1.08856. I would say that if we break below that, then we're going to get as low as 1.08580. But realistically, making these rejections, and the CAD does look a little bit strong in the kind of intraday market. So I would say if we hold on to these lows here and we don't significantly break this low point, then buy any bounces and try and get back to this 50% up here. So 1.09357. So the more we hold above this trend line and this lower point here at 1.08856, the more likely we'd see a bounce up in the CAD. Longer term, looks pretty strong. Yeah, it looks still pretty strong on the weeklies, really. So I buy. Well, it starts looking a bit weak on the dailies. In between, really, it's one of them. It's difficult, isn't it? The overall trend, I would say, from the monthly higher time frames is higher, but it's looking in between the ranges on the weekly, a little bit negative the dailies, but the hourlies, again, although we've seen this weakness come in, if we do hold above this key, kind of Fibonacci hourly level here on the low point at 0.8856, then we're going to see a bounce higher in the short term. So I would say buying dips in the CAD is probably a good idea right now. Aussie, New Zealand dollar. Oh no. Yeah, upward trend really. We're towards the highs of the fib now on the hourlies. So I'd say once we start to close below 1.12158, then your trigger point is 1.12084. Still looks fairly bullish at the minute on the smaller time frames. So this year pivot here, we keep holding above this point, then we're going to buy and get higher and make some new highs. But if we hold below that, then we're going to test all these lower fibs and probably get down to 1.1531. Okay, a minute now before the data, guys. So the call is unchanged. Look for weakness in cable, strength in the FTSE. Okay, 10 seconds to the arrow. Just listen out from him. Unchanged. Okay, unchanged as expected, guys. Let's just listen for any comments or anything coming through. nothing really coming through. A little bit of a gap when the turn of the hour and the next hourly candle opened in cable. So again, we're really bouncing on this this daily point of support down here. So the market does find any kind of momentum, and these are the lower points we're going to get to. FTSE again has opened on the high of the fib extensions, so really looking still quite strong in the FTSE. Again, we could quite easily see these highs broken. Nothing particularly happening in gold. It's still looking a little bit negative. So the highs that we're selling in gold, still, trying to push through. Again, remember any highs in cable looking to sell, and any lows looking to buy in the FTSE. So we continue to remain above 688.54. Then you expect these highs to be broken at 6898 spot 80 in the FTSE. So we're getting a bit of a bid coming now. So nothing really particularly coming out after this interest rate, seems to be pretty much as the market expected. But again, no news is good news. So again, looking to hit these highs in the FTSE, just this previous high of the last candle, but 6896 spot 30 and 6898 spot 80 are where the market really is going to have to break if it's going to make any inroads and try and get to that 7,000 mark. Any strength in the FTSE, naturally you'd expect weakness in gold. So again, 1269.58 will be a bit of a trigger for that point down here. No real reaction in cable. We haven't made any attempt to close or break aggressively below that daily level. So maybe we're going to come back into the range and towards the midpoint. But the FTSE seems to be the one we're keeping an eye on right now. And we've got our targets to break here. So if we do, then it could be very, very interesting to see how high the FTSE gets. And again, we've got the ceasefire in Russia, but nobody really believes it. We've got interest rates, nothing really kind of being said or being changed. So that's something that I guess it's not a negative, so it means it's a positive. And we're still bullish the markets, aren't we? My kind of argument is, where would you put your money right now? Would you put it in Greek bonds or would you put it in Google? The majority of, listed companies, both in the UK and the US, have more money than, sometimes some countries. So realistically, your money's going to be safer and your dividends are going to be better by putting them into companies rather than buying government debt. So I've hit them highs of the previous candle in the FTSE now. So we're going to target, that 6898 spot 80 high. And I would expect, a quick sharp break above it when we do. We expect a bit more weakness to come into gold, I suspect. But again, you have to be patient with these things. There's no point just, seeing the FTSE, go bid and expect gold just to negatively then sell off. It doesn't work like that, does it? Okay, Harash is asking the euro versus pound, bullish or bearish for this week. Well, euro pound, I guess you're going to see depending on what comes out of the ECB, but I expect more weakness in the euro. The fact that Mario Draghi is keeping negative deposit rates, talking about bringing rates down further, isn't a long-term strategy, isn't a long-term plan. If the UK putting rates up as of the US, that means normalization is happening. If the eurozone's the only one out there not doing that, then that really means that there's serious problems, aren't there? So let me just find that for you. Where's the euro pound? There it is. So I'd expect further weakness, as we've seen here. Again, that 50% working very, very well in the hourly chart. So 0.79841. We're going to see lower points coming into the market. Then we'd see 0.79726. Below that, 0.79583. On the bigger picture, very much like gold, isn't it? We're making these lower highs on the monthlies. I guarantee we're below the 50% where the up move started. Up move, yeah, 50%. Again, look how the market, decision, rejection, are moving lower. So we're right on the 61.8. So we're close below that. And the euro, against the pound is certainly going to weaken. So we'd see 0.77560, and I would say that euro 0.70 is really where we're going to rest, I would say, by the end of the year. Probably, fill this big void and get right back into this initial up spike. I don't see any future for the euro in general, and I've said this for probably 2 years on FX Street. And I was right about interest rates in the UK, and I'll be right about the eurozone, to be honest. The eurozone in the next 5-10 years will split into north and south currencies. Okay, I cannot see what dramatically is going to change in the eurozone to let that happen. To not let that happen. You can't make Greece act like Germany, and Germany, they don't have infinite deep pockets, do they? They can't just carry on trading forever. With these, they're not having great figures out of France, not having great figures out of Germany even. So if Germany's bankrolling the rest of Europe, then where's this money coming from? Where's the growth coming from? Just don't see it. So I would be absolutely amazed the next 5-10 years if the euro doesn't split into north and south. You know what? It might even happen as quick as the next kind of couple of years. These increased tensions with Russia, the increased problems with youth unemployment, and lack of direction and inspiration from Mario Draghi, could just be. It's only going to take one thing, isn't it? And probably the weakest link. And the weakest link is, in my opinion, Greece and Spain. So Greece decide that they've had enough, going to go back to the drachma. That'll be game over for the euro. Simple as. And it'll split. So I might see a little bit of short-term relief and strength in the euro, but I'll be selling any high points in the euro. Okay, so look on your weekly charts, on your daily charts, any high points that we see in the euro versus the pound, I'll be selling back down because the trend for me is clearly down. Okay, so we've closed that gap now. So I'd let us hover around that gap, and if we start to then close anywhere below 0.80, to be honest, I'd still be looking to sell the highs and further weakness to come back into the euro. Okay, good shout. Anything else we'd like to go through, guys? We've only got about 5-10 minutes or so for the end of the session. Nothing really kind of major happening, as I said, on the back of that Bank of England. Again, we're getting towards as highs in the FTSE, and now gold is starting to react to these highs. So, my logic, higher term, and my views are the FTSE is going to go up. That means, I've tied in gold weakness. So gold weakness is 1269.58. It's going to touch that at some point in the next 15 minutes, and that'll be the decision point. Rather than break through and fill this void down to 1267, or we bounce back up. Okay, the market's expecting the rest of the indices to move higher, so that's going to have its own impact on native currencies like the pound, but it's also going to have inverse correlations to gold. Gold, for me, as I said, is particularly vulnerable at the minute, and we're going to see what happens to 1269.58. Rather than going to see a good hard bounce or an aggressive break, I would expect to be taken at this low here. We go straight down to 1267. Really, an aggressive big candle sell off, because we see that in gold a lot. We've already moved 13 ticks or so. We could easily see it move 28, 30 ticks, 40 ticks down to these low points. No worries. That's what I'm here for. I'm glad you understand. So we're just going to test this level any second now in gold. So see how the market reacts. We could see a quick bounce, or I suspect a very, very sharp push towards these lows down here. So we've touched it now. So again, we can look on this in the 15-minute chart, see how it's building up. Okay, so we're towards the low ends of the fib, on that level that I spoke about. So we break that low, then 1268.20 there and thereabouts. Then we've got a big gap to fill. Yeah, down to 1262. So if you still maintain that the indices are due to make new highs, then gold can only really go down, can't it? While we talk about ceasefires and we talk about trying to sort out the tensions in the Ukraine, the more that's on the table, the weaker gold will be. But I don't think there's enough money out there in the world to push gold back up, certainly to 1900. So in the short term, I don't see there being enough fear in the world to push gold back to the highs. So it's not going to go back for technical reasons. It's not going to go back for fundamental reasons. It can only go down. And the more it goes down, the more people panic. People will still be sat there with gold bars and, gold they've bought, for an investment. And the second it starts to get anywhere near 1,000, 150, and people can see that $1,000 mark in sight, people are going to cash in. And that's only going to add more fuel to the fire and make gold prices, even more aggressively hit lower. So What else you want to look at, guys? You want to look at the Euro Swiss and Aussie Euro, nice setup or not? Okay, we'll just go through them. The Euro Swiss. Euro Swiss, yeah, looking to get back to the highs, got some clear points at 1.20746. If you're going to look again from where the highs and lows have been made, that 50% is back up here. So it looks, in the short term, it could be a little bit positive. Okay, we're making that the inroads higher. It looks pretty strong. So we break 1.20746, we're going to get to that 50%. So I'd say the short-term trade would be buy breaks and then look for one spot 20759 to be hit. Then above that, one spot 20786. Okay, so potential upside breaks of 29.56 ticks. So again, we've rejected. Well, the market closed and rejected this point. We instantly opened higher. We're going to make a new high from this point. So you're looking for the market now to break. So break 120.739, 120.743. Targets 120.759, 120.786. So yeah, I'd say, but you need to be buying quickly or buying above that 50% at 120.728. Okay, so these are your levels to test. Let me just open your PNG. Oh, you're looking at the Euro Aussie. Okay, let me look at that on my chart. So yeah, I mean, again, we're already hitting these levels now. So the next level we're going to test is 120.746. Everyone who's short is going to be pushed out. So your next level above that is 120.759. Okay, so we'll keep an eye on that. Just how that. Oh, how's it going? Okay, Euro Swiss is there. Okay, no problem. Let me just look at what we're trying to look at now. The Euro Aussie dollar. So keep one eye on the right-hand side. That'll be the levels that we're going to be tested. We carry on in the Euro Swiss. Euro Aussie dollar. Let me look at your setup. So you're looking for a buy or you're looking for a sell from that setup in the Euro Aussie dollar? Because I would say that looking weak. So I'd be looking for break points. Yeah, looking for a break point right here, to be honest. So in the hourlies, although we've come to the low point of the fibs, if this fib now acts as any kind of resistance, we break 1.40494, then there's nothing really in the charts until 1.39207. So I wouldn't be getting involved now, but I would let this hourly candle close. If this hourly candle closes above 423, okay, there might be a bit of short relief till these upper points. But I would say if we close below it, then definitely the market breaks these lows, and you've got, I would say, maybe 120 ticks of potential downside. So keep an eye on 40857. That could be a consolidation area. But this really here, this 423.6 point here at 140.494 is where the market is going to take a trigger point from. So if we hold below it, okay, then the market's definitely going to fill this gap and get lower. It looks negative on the higher time frame. And as I've always said, I'd sell the euro highs against anything. I'd sell the euro against any major currency. I'm always selling highs in the euro because of my fundamental and technical viewpoint. Okay. Sell, yeah, I'm with you then. Yeah, I agree. Sell is the way to go. Okay, final one before we call it a day. The Aussie dollar versus the US dollar. Looking strong, okay? Looking strong in the Aussie once again. Monthly, kind of consolidated again, but the market looks to be consolidating towards the high side of the hourlies. We're breaking above the fibs. So as long as we hold above 0.932265 and these upper fib levels, there's more strength. I mean, just do your fibs. Up move started here. Okay, we're way above the 50%, never tested it, way above the 38.2. And the 23.6 is acting as perfect support. So the longer we hold above that level at 0.93395, the more chance we've got of breaking a new high. So I would say probably the Aussie is going to gain some strength, and I'd expect 0.93737, nice number there, to be hit at some point, I would say probably today or tomorrow, because it looks like we're going higher. Okay, guys. Well, I think that's pretty much it was a bit of a non-event. The Bank of England, I'm afraid. I have no control over these things. But what I do control is what I say to you. So these levels have been broke. So the next logical level is 1.20759. in the Euro Swiss. So again, see how this candle opens now in this 50-minute chart and see if we break to these higher levels. So yet again, this is your technical working very, very well. Did break the highs of the previous candle in the FTSE, but we haven't finished yet. Still got 45 minutes for this hourly to close. I'd be amazed if we don't break 6898 spot 80 in the FTSE today. That would again bring into to some question about gold. Let's just see what gold is doing right now, because I believe that gold should be moving further down based on everything that I've said. So haven't just yet. We've bounced perfectly off what I said, the attraction point at 1269 spot 58, but we haven't finished yet. So let this hourly close and then see if the market then breaks 169.58, and then we're going to get to 1267 spot 28. Okay, so trade gold off the FTSE, but again, FTSE very, very bullish. Gold still particularly bearish for me, and I'll be selling what we wouldn't be doing is buying into this euro strength right now. I would let the market push aggressively to these levels, and I'd be selling 120759. Okay, well, probably not that. Probably 12. Bloody charts. Right, let's put it on the hourly. It's 15 minutes. Acting stupid. I would say that I'd be selling any of the big high points in the Euro Swiss. So I'd say 120771 is where I'd look to start selling, because I don't believe there's enough strength in the euro to push it against the Swiss. Okay, so I'll be looking to sell high. All right, guys, been an absolute pleasure. Anything else you want to know, guys, do get me on Twitter at Steve Ruffley, and just contact the guys at FX Street. I'm not difficult, that's fine. All right, guys, hope you enjoyed it. It's been a pleasure. Okay, good afternoon.